Born in 1877, it would seem like a foregone conclusion that Jesse Livermore would not have much to contribute to the world of cryptocurrency trading. After all, he died long before Bitcoin's white paper was published, and he wasn't even alive when the internet was invented. However, to dismiss Livermore's principles as outdated is a very grave mistake. In fact, nothing could be farther from the truth. The art of speculation is eternal, and the concepts Livermore established are just as valid today as they were in the 1920s. Let's take a look at some of Livermore's trading concepts and how they can apply to cryptocurrency trading. First, we must consider if Livermore would even trade crypto. Would he be a proponent of it, or would he choose to stay away? People usually fall into two camps in terms of cryptocurrencies. Group 1 are the die-hard fanatics, those who believe it is a new and unstoppable technology that returns power to the masses. Group 2 tends to be traditionalists, like Warren Buffett, who believe it to be useless and a total scam. What would Livermore believe? Livermore would probably fall into neither camp, and instead would look to the markets for guidance. He would not concern himself with taking a particular side, and instead would let the charts tell him which way to turn. Simply put, he'd be bullish in a crypto bull market and bearish in a bear market. What cryptocurrencies would he be likely to trade? This one is rather simple. Livermore was a big proponent of keeping a narrow watch list, and he chose to trade primarily in the leading names. Bitcoin and Ether are by far the leaders in the crypto universe. Not only do they have the largest market caps, they are also the most familiar names. This is likely to attract the most buying, since many investors will not be willing to venture deeper into the less established names. Smaller, less familiar cryptocurrencies may explode here or there, but Livermore would most likely remain focused on Ether and Bitcoin, since these are the two that are likely to attract the most attention and ultimately the most accumulation. Since he was not worried about opinions, Livermore would look to charts to tell him what to do. He knew that you needed the trend at your back if you wanted to be a successful speculator, and trying to force your will on the market is simply put a fool's game. Thus, he'd look for the line of least resistance and then seek to trade in accordance with this trend. So how do you know where the line of least resistance is? There are a few ways to do this. The first is to look to see if a trend is in place. An uptrend can be defined as a series of higher highs and higher lows. Using a simple trend line can help you quickly get a sense of which direction the line of least resistance has been established in. Moving averages can also help determine what conditions are taking place. The 20-day, 50-day, and 200-day moving averages are popular gauges of market trends. When Bitcoin, for example, is above all of these three moving averages, with the 50-day moving average above the 200-day moving average, the line of least resistance will most likely be towards the upside. Conversely, if Bitcoin or any other cryptocurrency were to fall below these key moving averages, it's probably best to step aside until conditions improve. Jesse Livermore chose to buy breakouts for a few reasons. First, he didn't want to limit his buying and selling to opinions or predictions. Instead, he wanted to focus on facts. If a stock were to break out of a narrow range, it indicated to him that something exciting was taking place. Just monitoring price action would let him know whether the bulls or bears were in control. Second, Livermore liked to trade breakouts because if a stock could clear an important resistance level, it would indicate to him that the line of least resistance had now been established to the upside. This would mean that the momentum would most likely be in his favor. In addition to buying breakouts from key resistance levels, Livermore also liked to see how a stock would act around certain numerical levels. For instance, he believed if a stock could clear round numbers such as 100, 300, 500, or even 1,000, it was likely to rally another 10%, since these numbers have a psychological effect on traders. Thus, Livermore would want to see how Bitcoin or Ether were acting around major levels such as 5,000, 10,000, 30,000, etc. before making his decisions. One of the early mistakes Livermore made was selling stocks too quickly. After many years of trading, he soon came to the realization that it is the big swing that makes the big money. Often traders make the mistake of selling too quickly. They catch a 5% move when they could have made 300%. They sell thinking they will buy back the stock on a reaction, but in reality that reaction never comes. Crypto moves can be quite monumental. Disregarding the big move can be devastating both financially and psychologically. Thus, it is of the utmost importance to know where you are in the crypto cycle and have a sound plan before you enter into any trade. Even if you spot a great opportunity early in its cycle, it can be extremely hard to let a big winner run. But that is exactly how the big money is made. Overanalyzing each and every tick or every Twitter post or news headline can wreak havoc on a trader. Follow Livermore's advice. Close your door. Turn off CNBC. Grab a bench and follow your rules. When you find yourself in a big winner early on in its cycle, you will soon see the wisdom in Livermore's statements as your winner begins to compound its gains day after day, week after week, and month after month. Most people don't make any money trading crypto for one simple reason. They don't put in any effort. Think about it. If you ran a business and showed up without a plan and just thought you'd quickly and easily make money, how do you think that would turn out? This is how people treat trading. They chase after Bitcoin when it's hyped up and going parabolic. But once they're at a loss, they sell it and swear they will never touch a cryptocurrency ever again. Sure enough, during the next cycle, they're at it again, repeating the same patterns over and over again. If you want to be successful, you have to put in the work, day in and day out. Personally, I'm always watching crypto, even when I'm not trading it. My eye is always on the ball. Like Livermore said, you have to be on the job. Those who only trade crypto when everyone is excited will ultimately find themselves late to the party. Finally, Livermore knew that there was a time for everything, including a time for fishing. Crypto bear markets can be brutal. The FTX collapse shows that even the most established names can be taken out. When a bear market hits the crypto universe, I personally prefer to take all of my money completely out of my account. It's better to be safe and to go fishing than to be left with nothing but regret. Although he traded long before the advent of cryptocurrencies, Jesse Livermore's trading concepts are just as valuable today as they were when he lived. Despite all of our modern technology, Livermore's core principles prove that speculation doesn't change. And as long as there are humans who experience the emotions of fear and greed, nothing ever will.